Folks, I'm watching the markets to see if they hold on to gains, because we are just getting this breaking news coming out of the Chinese embassy. Chinese officials are saying that U.S. actions recently have done, quote, serious damage to China-U.S. ties, as well as to economic and trade relations. And also, just crossing the wires right now, a senior U.S. official says President Trump is prepared to respond to any issues raised by China. And of course, Trump is going to kick off a high-stakes trip to Asia just 7 hours from now. He's going to cap off a three-nation visit, ending in South Korea, where he's expected to meet with Chinese counterpart Xi Jinping in a showdown that could have major ripple effects across global markets. As we can see from the news that just broke seconds ago, no outcome is guaranteed. As Edward Lawrence has been reporting, in the past 3 weeks alone, the Trump administration has threatened controls on cooking oil and software in retaliation for China clamping down on its own rare earth exports. The tit-for-tat fighting has kept investors on high alert. A big question now, how will headlines from this Trump-Xi face-to-face next week and the ones coming out right now play out with investors and emerging market investments? Joining me now in a Fox Business exclusive, the godfather of emerging markets himself, Mark Mobius, chairman of the Mobius Emerging Opportunities Fund. Mark, thank you for joining us. You're live in Dubai. What do you make of China throwing down the gauntlet just hours before President Trump is supposed to head to a big meeting there?
Well, you must remember now, they've just finished the plenum, the fourth plenum of the Chinese Communist Central Committee. And two important points were made at that meeting. One, China is going to be self-reliant on technology, less reliance on foreign technology. That's one very, very important point that they've put into the program. The second thing is that they will continue to have a strategic competition. Now, they don't mention the U.S., but it's obvious that they are going to continue to compete with the U.S. In technology and every other way. And I tell you, if they really get behind this, which they will, it could be quite earth-shattering, because they're catching up very fast with the U.S. Just look at what they did with electric vehicles. Chinese electric vehicles are far superior to anything else in the world today. And that's because the government got behind them and said, look, we're going to support you in every way we can. We're going to subsidize you. And of course, that's what's happening. So I think in the meeting in South Korea, I think you're going to see the fact that trade and tariffs rollbacks are unlikely. It's unlikely that both sides will give in on this area. Maybe a few points in there, but other than that, no real big change.
Boy, I am thinking specifically about NVIDIA, because we told our viewers at the top of the show that last week, Jensen Huang, the CEO, had told a conference, the Citadel conference, that his China business has gone to zero. And it's not because the U.S. is banning him from selling to China. The president opened up that gate because he's going to be taking some of the revenue from those sales, but because China got upset and said exactly what you talked about from the plenary, that forget it, we don't want to rely on American chips and American technology. Right now, we've got NVIDIA up 2.5%, but how do you expect that this would affect a company like that, who's hoping to get back to doing business with China? I would think ARM Holdings is somebody that is a company that would be possibly exposed here. What other ones?
Well, all of them. And it's really interesting. The NVIDIA leader did say that the Chinese are right behind them. They're catching up very fast. So these companies are going to be threatened by Chinese developments and by the push that China is making. So it's a big, big threat for the U.S. And the U.S. is going to have to really put many more resources behind the technology push in semiconductors and every other area, robotics, et cetera, et cetera.
Would you avoid Chinese equities right now?
No, because many of these companies in China, as I pointed out, are now catching up. They're going to become less and less dependent upon U.S. And if you look at the Chinese market, it's been recovering. Actually, the Chinese market is outperforming the U.S. market and outperforming India. You know, I was a big fan of India I still am, but basically China's outperforming. So no, I would still be investing cautiously, let's put it that way, in China.
India still has 50% tariffs slapped on it by President Trump. India has now said that it will scale back from buying oil from Russia. I mean, China is still buying oil from Russia. That can't possibly make President Trump happy. Tell me exactly where you like to invest that doesn't have these cinder blocks hanging around certain stocks and areas of the country to invest in.
Well, first of all, Korea. South Korea is doing very well, and there are many great companies in South Korea. Japan, interestingly enough, a lot of Chinese are moving into Japan. Many of them are leaving Singapore, for example, and moving to Japan. So that would be another area that you have to look at. It. Of course, Japan is not an emerging market anymore, but it's the market that you have to look at. And believe it or not, Taiwan is still doing very well. Despite the possibility of China takeover, which is not going to happen anytime soon. So the Chinese takeover of Taiwan is very unlikely, and I think Taiwan will continue to do quite well.
The Kospi index in South Korea recently hit an all-time high. This appears to be a very rich area to invest in. Specifically, which sectors do you like?
Technology would be one area which is very, very, very good in Korea. Semiconductors is one part of that technology area would be important. Medical equipment, the Koreans are doing very well in the medical area and also in cosmetics, in things related to beauty. They have all kinds of new technology to make people look younger. And that technology is very, very important in Korea.
Do you think AI globally is going to be spreading its wealth specifically in the emerging markets that we have regarding the Middle East? You do a lot of business in the Middle East. Obviously, this is an area where they have a lot of money to spend. We saw it in May when President Trump went there. He went to Qatar and Saudi Arabia, and companies struck many, many deals. I mean, I talked to Lisa Su of AMD about the business that she struck in Abu Dhabi, and Jensen Huang has done some big news there. Same with Oracle and so many other names. What are you seeing there? Is it all tech focused now and way less dependency on, fossil fuels?
Definitely. Here in Dubai, there's an incredible interest in technology, and many people are moving here to start AI companies. And in fact, they just finished a tech conference here, and the traffic was terrific. The number of people coming to that conference was quite amazing. So definitely the emphasis here is on technology, and particularly AI. And by the way, AI is changing so much of what we in the investment community are doing. We can now get information on the AI systems that we normally would rely on analysts. So this is a big, big change that's taking place globally, and particularly here in the Middle East.
It's not always an easy road. Is there, in some ways, things that you have to be aware of? For example, I mean, Saudi Arabia under Vision 2030 has been pushing its markets to foreign investors, economic reforms. But are there key factors investors should be aware of if they are considering investing in the region?
I think they have to be aware of overbuilding. As you know, Saudi Arabia has perhaps gone a little bit too far in some of its programs and is now scaling back because they're frankly running out of money. Here in Dubai, it's a very interesting situation because I walk out the door every day of the week and I see new construction taking place, and you wonder who's going to take up all this space. But then you must realize up to now, this year, 180,000 new people are coming to Dubai to live. And they expect by the end of the year, it'll be over 220,000 new people. So you can imagine the construction is going to be very, very important. But I necessarily would not go into the market. It's a very liquid market, but you're better off looking at the technology area.
This KSA fund, it's the iShares Saudi Arabia ETF. I'm just letting our viewers know it's actually done decently well, not really. I mean, it doesn't appear with all of the action there that it's done much. It's flat quarter to date and down about 2.25% year over year. But I can see where the future is going, Mark, and you are always seeing the future. Thank you for joining us to talk about it.
It's a pleasure. Thank you.